So welcome back to the channel. In this video, we have a trio, an offering of three things for you here. Cardano, a big update here. We've also got Roger, Ver, and Coinflex update, plus Celsius. What is the latest over there and what are the potential outcomes as Simon Dixon sees it? If you enjoy the content, make sure you subscribe to the channel. So starting off with some Cardano news. So Cardano sharks in a buying spree, apparently, according to data from Cointelegraph here and the analysis of sentiment on the blockchain. So it says notably addresses holding between 10,000 and 100,000 ADA tokens. These are quantified as sharks. They've added 79.1 million tokens, almost $40 million worth, as of July 9th to their reserves since June the 9th, so over that 30-day period. So we're seeing an increase by volume coming in from those which are sharks. Okay, so what does this mean? Is this bullish for the overall ADA price? As we're going to see in just a second, when we look at the price, not particularly bullish on it right now, but I think in the short term, there could be some clever buying here as there may be a pump to follow. But I also do think that this has maybe started to almost play out the move. And I'll show you exactly why that is in just a second. So it says the biggest holders, the whales that hold between 100,000 and 1 million ADA, have stopped selling. So this is the kind of bullish posturing they're talking about. You've got some who have stopped selling and others who have been buying like mad. So the 1 million to 10 million, this is the actual bracket that I think is the most important here to see what the behavior of these mega whales are. And it's the orange line here. As you can see, they sold off massively. If hopefully this is clear on your TV screen or wherever you're watching from. They had a massive dump here at the start of June. And then they started to push sideways, just keeping hold of the coins they've got. And they started to buy again, leading into this first week of July. This kind of corroborates with what's been going on in terms of the next update for Cardano, which is called Vasil. Okay, so this is all about the next upgrade for Cardano, which is to do with block propagation. So block propagation, i.e. how quickly the blocks are put together, block time increases, you have a more scalable blockchain. So this is all about scalability. So another potentially bullish catalyst is a major technical upgrade slated for the end of this month, following a successful testnet implementation on July 4th. So July 4th rolled round, and this is where we saw a bit of, into that kind of weekend uptick in buying from everybody. We have the yellow, so that is the sharks, 10,000 to 100,000 holders. We had the mega whales also buying during this period. And also down here, you can see from the green line, which is the price, it started to tick up as, most people were starting to buy through this period. So testnet implementation, you had buyers stepping in. So that is pretty typical for, buy the rumor, sell the news, but this will have mainnet consequences by the end of this month is the deadline slated thus far. So the key thing to keep an eye on is what are these guys doing in this amber line, which is the mega whales. If they start to dump, we're going to see the Cardano price also dump down. So this is where we're looking at now. It's going to make Cardano a faster block time. A lot of people have complained about this. I found some hilarious tweets on Twitter relating to Cardano and some of the transaction times going through. I'll let you search for those yourself, though I didn't want to come on here and slate Cardano. I think it has a bright future potentially, but obviously teething problems. So if we just look at the chart here, we had quite a bit of buying going on through the kind of first week of July. This kind of saved us. This is the rectangular box that I've pointed out here with the yellow line just at the top, which is kind of a price support level around 46 cents, quite a few wicks below. We got a few dump downs, which were quickly recovered here. But even with this kind of bullish posturing with a testnet deployment, it just brought the price back up to around 46, 47 cents. Barely breached 50 cents here. And what you can see from this, we've got a bit of a descending wedge pattern here with serious resistance up above. And it looks like this may conclude in the next few days here. This is a pretty bearish chart pattern due to the fact the general trend of the market is currently down. If we were in a bullish posturing and we had this same descending wedge pattern, then it may not be too bad because the overall trend was bullish. This could potentially break to the upside, but statistically speaking, this is more likely to break down from here. So potential catalyst to push this lower, the mainnet implementation does not go ahead, for example, more delays, that kind of thing would be bad, or we might just get a buy the rumor, sell the news piece once this is officially unveiled on mainnet. So that is the update for Cardano here for all the ADA fam out there. Next up here we have Roger Ver, and this is the issue with Coinflex, one of the providers of I think they did loans plus trading plus kind of custody. Coinflex to sue Roger Ver for his margin call repayment. So he owes them a shed load of money here. They have launched legal action against him. Roger Ver, famously the creator of Bitcoin Cash, or as some call it, Bitcoin Trash. And they are now trying to recover up to $84 million lost after liquidating his position. Ver asked the company to liquidate his position, but failed to provide extra funds. And Coinflex have plans to raise additional capital now through converting investors to shareholders, i.e. an equity raise, and through a partnership with a large US exchange. Rather messy situation. If we just scroll down here. So there was a lot of speculation that maybe this was Three Arrows contagion as the reason why they stopped all withdrawals. But that was not the reason. It was apparently Roger Ver, the culprit here. So Coinflex, 84 mil out of pocket. Ver was a customer with a manual margin. This meant that unlike regular users who are automatically liquidated when their leverage ratio falls below a certain threshold, he was granted a grace period to add more collateral. He did not do so. This has left them in a position of having now bad debt. Ver then asked the company to liquidate his position, promising to provide funds to take delivery of futures contracts, but failed to honor the compromise. Coinflex liquidated his position, but was left with a deficit of $84 million. So this just points out, you should only interact with code. And the lesson here over the last few months is you cannot trust human beings. Smart contracts are all about the implementation of code on the blockchain that is immutable. And once you have code with Lindy behind it, i.e. it's been around a long time, it works, it does exactly what it says on the tin, you can trust that. But you can't trust human beings, as we're all finding out here far too often. And thus, Roger Ver had this bit of a special relationship here with Coinflex. He reneged on his position, he screwed them over here, and now they're after him in the courts. And what is even more funny, or not, is the fact the coin that he put up as collateral for this position was the Flex token, their native token, which is kind of crazy. Clearly, you probably shouldn't be allowing for people to take leverage on your own token on your platform, especially without strict rules in place to liquidate him to ensure that you're made whole. But meanwhile, what has Roger Ver been doing? Well, he's denying all rumors here. He says recently some rumors have been spreading that I have defaulted on a debt to a counterparty. These rumors are false. Not only do I not have a debt to this counterparty, but the counterparty owes me a substantial sum of money, and I'm currently seeking the return of my funds. And as I think it's Pentoshi put down here, Bill Clinton style, I did not have sexual relations with that woman. He's very much guilty in this scenario. Clearly, they're not going to lie about knowing who this huge counterparty is with 47 mil in collateral. It was him. So the good, the bad, and the ugly here. Finishing off with Celsius. Celsius continues to send its remaining crypto assets to exchanges. A few hours ago, 20,000 wrapped Bitcoins were transferred from their main wallet, and after a series of hops, skips, and jumps, eventually hit Coinbase and Binance, says Light Crypto here. Their remaining key assets are around 410,000 staked Ethereum, worth almost $500 million, and 16,000 wrapped BTC remaining. You can see some of the transfers within this tweet in here, Coinbase and Binance being those exchanges. Whether or not they're selling them on those exchanges, seems likely, given the fact that that's where you send your coins to sell them. We really don't know what's happening here. There's no transparency at this moment in time. So what are the, worst, best, and middle road kind of solutions to this? Simon Dixon with the tweets here. Not legal or financial advice. I believe the worst case is Celsius Network cannot reopen without new licenses. All the crypto is sold and you end up with some USD on non-sell balances. Exchanges delist the sell token, making it illiquid, and every legal case delays withdrawals. And I want to avoid this. The best case scenario, he says, is that Celsius Network releases transparency on numbers, and there's no issues other than illiquidity. They settle with regulators, apply for licenses, and withdrawals are opened as liquid with a new compliant user experience with disclosures. Cell removes security-like features. However, he says the middle option, so this is probably the option they're going to go down, middle option is Celsius Network releases numbers, i.e. the whole, and a group with licenses plus liquidity and a solid recovery plan takes over, or that happens in Chapter 11 if they are not willing to release the numbers prior to this. That is Chapter 11, bankruptcy. I'm happy with the last two. I'll fight for depositors first to avoid the worst. So the situation with Celsius still very much unknown, but seems to be getting, worse by the day in terms of the FUD or the information being spread out there. Now, if you have got the chance to watch James from Invest Answers interview with Simon Dixon yesterday, this was a worthwhile watch. You can probably skip about halfway through if you've watched Simon talk about Celsius previously, as it's kind of an iteration, but some of the questions towards the latter stages of the interview are very interesting indeed, and he gives a bit of his own opinions on the situation, which I won't go into now, but rather juicy stuff to listen along with. So many observations in the crypto space right now, the main one being do not trust people, just interact with code, smart contracts, and remain the custodian of your own funds. Those are the key takeaways from today's video on this nice sunny Sunday over here in Thailand I'm at. So subscribe to the channel if you're new, drop me a comment down below. I'll leave a question of the day down below for you as well. See you in the next one. Goodbye.